In today's digital age, three groundbreaking technologies, blockchain, artificial intelligence, AI, and big data, are reshaping the world of finance and beyond. While blockchain was initially popularized by cryptocurrencies like Bitcoin, it's now transforming a variety of industries, from healthcare to supply chain management. Similarly, AI is revolutionizing how financial services operate, improving efficiency, security, and customer experience. Meanwhile, big data analytics is giving financial institutions the power to predict market trends and understand customer behavior in ways that were once unimaginable. In this video, we'll explore how these technologies are transforming the landscape of finance and other sectors, and the challenges and opportunities they present. 1. Blockchain technology. Blockchain technology, initially designed as the foundation for cryptocurrencies, has expanded its reach across multiple industries. At its core, blockchain is a distributed ledger system. This means that instead of being stored in a central database, information is stored across a network of computers, ensuring that no single entity controls the data. Each participant in the network has a copy of the ledger, making the system highly secure and reliable. What makes blockchain particularly powerful is its structure. Transactions are grouped into blocks, and these blocks are linked in a chain. Once a block is added to the chain, it becomes virtually impossible to alter or erase. This transparency and immutability make blockchain an ideal technology for applications where trust, security, and verification are crucial. While blockchain's most well-known application is in cryptocurrencies like Bitcoin, its potential goes far beyond digital currencies. Another promising application of blockchain is in the area of smart contracts. These are self-executing contracts where the terms of the agreement are written directly into code. When specific conditions are met, the contract automatically executes, without the need for intermediaries, reducing costs and speeding up transactions. Smart contracts are already making waves in sectors like real estate and intellectual property. One of the most exciting uses of blockchain is in data privacy. Today, many people lack control over their personal data, which is often stored by centralized companies. With blockchain, individuals could control and manage their digital identities securely. Blockchain could even protect sensitive data, such as medical records and financial information, by offering a more secure, private way to store and share this data. However, blockchain faces challenges like scalability and energy consumption. Many blockchain networks, such as Bitcoin, can only handle a limited number of transactions per second, which is far less than traditional payment systems. It is already disrupting industries such as healthcare, finance, and entertainment, and its influence is only set to grow. 2. Artificial intelligence in financial services. Next up is artificial intelligence.
But its performance is incredibly strong in terms of its AI maturity. It's head and shoulders above other banks.
AI is rapidly transforming the financial services sector, helping institutions become more efficient, secure, and customer-centric. One of the biggest benefits of AI is its ability to process vast amounts of data quickly and accurately. In finance, this data comes from customer transactions, market feeds, social media, and more. AI algorithms can sift through this data, identify patterns, and generate insights that help businesses make better decisions. For example, AI can predict market trends, allowing investors to make smarter, data-driven decisions. This can lead to better returns and reduced risks. AI is also changing how financial institutions engage with their customers. AI-powered chatbots and virtual assistants are becoming increasingly common in banking apps, helping customers with tasks like checking balances, transferring money, and answering questions 24/7. In risk management, AI is proving invaluable. Financial institutions can use AI to model various risk scenarios, analyze potential outcomes, and assess a borrower's creditworthiness. Unlike traditional methods, which rely on income and credit history, AI can take into account a broader range of data, such as shopping habits or social media activity, leading to more accurate and inclusive risk assessments. Fraud detection is another critical area where AI excels. AI can monitor transactions in real time, flagging any that seem unusual or suspicious. If an account suddenly makes a series of large withdrawals, for example, the system can automatically flag the transaction for review, reducing the potential for financial loss. As AI technology continues to improve, it is expected to become an even more integral part of the financial sector. 3. Big data analytics. Now let's talk about big data analytics. In today's digital world, financial institutions are collecting massive amounts of data every day. Big data analytics allows these institutions to turn this data into actionable insights that can drive better decision-making, improve customer service, and enhance security. One of the key advantages of big data is its ability to help businesses understand their customers. By analyzing spending patterns, investment behavior, and even social media interactions, financial firms can personalize their services to meet the unique needs of each client. This leads to higher customer satisfaction, loyalty, and retention. For example, however, allows for real-time risk analysis, meaning financial institutions can monitor risk factors, such as market shifts or unusual transaction patterns, and take immediate action to mitigate potential threats. Fraud detection has also improved significantly with big data. By recognizing unusual patterns, big data systems can prevent fraud before it causes significant damage. Compliance is another area where big data plays a crucial role. Financial institutions must comply with complex, constantly evolving regulations. Big data tools can automate the monitoring and reporting processes, ensuring that firms stay compliant and avoid costly penalties. However, implementing big data analytics comes with challenges, particularly around data privacy and security. With the vast amount of sensitive information involved, institutions must invest in strong data protection measures. Additionally, the infrastructure required to handle and analyze big data can be costly. Despite these challenges, the potential of big data analytics is undeniable. 4. Mobile technology and accessibility in finance. From mobile banking apps to payment systems, consumers now expect instant access to their financial tools anytime and anywhere. Gone are the days of having to visit a bank during specific hours to manage your account. Today, you can check balances, transfer money, trade stocks, or even apply for loans with just a few taps on your mobile device. In developing countries, where traditional banking infrastructure is limited, mobile banking has enabled millions of people to access essential financial services for the first time. This has improved financial literacy and empowered individuals to participate in the economy. Platforms like Google Wallet, Apple Pay, and others are transforming how we make purchases. These systems use technologies like NFC, near-field communication, for contactless payments, making transactions faster, more secure, and more convenient. In regions like Kenya, where mobile penetration is higher than traditional banking, services like M-Pesa have revolutionized how people save, send, and spend money. But mobile technology's impact goes beyond payments. Apps offering budgeting tools, financial planning, and personalized financial advice based on spending habits have made personal finance management more accessible. Mobile technology has also made investment more accessible. Investment apps have opened the stock market to a broader audience, allowing individuals to buy, sell, and manage securities directly from their smartphones. This shift is breaking down barriers to wealth creation. However, this rapid shift to mobile financial services also brings challenges, particularly in security. The convenience of mobile technology makes it a target for cybercriminals, and financial institutions must invest heavily in securing their platforms. Data breaches and cyber attacks are major concerns, and banks must continually innovate to stay ahead of these threats. 5. Cloud computing in finance. Cloud computing has transformed industries worldwide, and finance is no exception. One of the key benefits of cloud computing is its ability to support innovation. Financial institutions can quickly develop, test, and deploy new applications or services without needing to invest in additional hardware. The cloud is also enhancing risk management and compliance. Cloud providers often offer solutions that are continuously updated to reflect the latest regulatory requirements. This helps financial institutions stay compliant without dedicating extensive internal resources to the task. Data security is another area where cloud computing has made a major impact. The centralized nature of the cloud allows for consistent application of security policies across all platforms. The ability to collaborate seamlessly across borders is also a significant advantage of cloud computing. In today's globalized economy, financial transactions often involve multiple parties across different regions. Cloud platforms allow these parties to access the same information in real time, facilitating faster, more efficient transactions, especially in international trade. Additionally, financial institutions must carefully choose the right type of cloud service, public, private, or hybrid, based on their specific needs. In the future, the integration of machine learning and AI with cloud computing will likely unlock even more powerful capabilities for the financial sector. 6. Cybersecurity measures and challenges. In a world where sensitive financial data is transferred and stored digitally, cybersecurity has never been more important. Financial institutions are prime targets for cybercriminals because of the valuable data they handle. One of the core elements of cybersecurity is encryption. Encryption ensures that data is unreadable to unauthorized parties by transforming it into a secure format that can only be decoded with the correct key. This is especially important for protecting data both when it is stored, at rest, and during transmission. Multi-factor authentication, MFA, is another crucial security measure. MFA requires users to provide 2 or more forms of verification, such as a password, a mobile app, or biometric data, before accessing sensitive systems. This adds an extra layer of security, making it more difficult for attackers to gain unauthorized access. In addition to these technologies, financial institutions must conduct frequent vulnerability analyses and security audits. These audits help identify weak points in a system's security infrastructure and ensure that vulnerabilities are addressed before they can be exploited. Human error remains one of the biggest cybersecurity risks. Despite sophisticated technology, employees can inadvertently expose systems to cyber attacks by using weak passwords or falling for phishing scams. This is why ongoing staff training is so important. Financial institutions must educate their employees about the latest cybersecurity threats and best practices for securing data. Emerging technologies like the Internet of Things, IoT, and cloud computing present new cybersecurity challenges. While these technologies offer significant benefits, they can also introduce vulnerabilities if not properly secured. IoT devices, for example, can serve as entry points for cyber attacks if not adequately protected. To address these risks, financial institutions need to implement secure software design, regularly update systems, and manage access control rigorously. Looking ahead, AI and machine learning have the potential to significantly enhance cybersecurity efforts. These technologies can analyze large data sets to detect patterns and anomalies that may indicate a cyber attack, enabling financial institutions to respond more quickly to threats. Investing in advanced security technologies and fostering a culture of cybersecurity awareness are crucial steps in safeguarding the future of digital finance. Conclusion. In conclusion, mobile technology, cloud computing, and cybersecurity are all playing pivotal roles in the evolution of the financial services sector. As these technologies continue to evolve, we can expect even more integration and innovation. AI, blockchain, and other emerging technologies will further enhance the functionality, security, and accessibility of financial services, creating new opportunities for consumers and financial institutions alike.